Hello, everybody. Thank you for joining our seminar presented by Lou Niedelman called Straight Talk About Auto Insurance. Lou has been a partner with the Cooper Levenson firm for decades and has been with the firm for over 50 years. So from there, Lou, why don't you get us started?
All right. This few minutes that I'm going to spend with Brian and you has to do with automobile insurance in the state of New Jersey. And we would like to share with you, as consumers of automobile insurance, our thoughts. And Brian is going to ask me some questions, and I'm going to try to answer them as best I can based upon the information that is available to us. Please keep in mind that any of our comments or advice that we give to you is not to be taken as legal advice. And you should also check with either our firm or your own attorney to confirm or change any of the commentary that we are exchanging.
Okay, Lou, thank you. First of all, for auto insurance in New Jersey, are you required to have it?
In New Jersey, anyone who has a registered vehicle on the road is required to have automobile insurance. Some states, I don't know whether it's Pennsylvania, but there are states that don't require coverage, but there is minimum coverage that is required for all registered on the road vehicles.
For personal auto, are there any minimum liability amounts that the state requires you to have?
There are $15,000 per person, $30,000 per accident altogether are the minimum limits that you must carry. Of course, there are limits above that, which you have to pay for, but the minimum limits is $15,000 per person from an accident.
Now, that's if you cause an accident, somebody can sue you, and that's what you would be responsible for, correct?
That's correct. You'll be
Now, what is
responsible.
I'm sorry. What
That's
what
right.
would be the difference between a liability coverage versus coverage for yourself under your own auto policy?
All right, that's called first party coverage versus third party coverage. First party coverage means that, and it comes with every auto policy. If you have a car that floods, or you have collision damage, you can go against your own insurance company for compensation for those damages and for those claims, and that's called first party coverage. Third party coverage is coverage that the same auto policy provides you with respect to any third party claims. And that means if you cause an accident and you cause physical damage or an injury, that person can make a claim against you, and then your insurance company will handle that claim and provide an attorney to defend you as part of the policy package if it goes into litigation.
Well, Lou, you told us before about the liability coverage and the amounts. From a first party coverage standpoint, that would be, I guess, insuring yourself, your family, and your household members, right?
That would be correct.
Can you increase limits or choose and pick what you want on a first party basis as well?
You can. You can choose, let's talk about comprehensive. So if your car is vandalized and there's, of course, damage, window damage, whatever, the minimum policy will provide you with a replacement, the repair of that damage. But you can also choose higher comprehensive limits or collision limits, maybe $50,000, $100,000. And of course, it becomes more expensive the more coverage you acquire. And there's also something called deductibles. And that means you are the first one responsible for a dollar amount for a particular claim. And to make it even simpler, if you have $1,000 comprehensive claim and you chose a deductible of $500, you would pay the first $500 and the insurance company would pay the next $500.
Lou, along those lines, for again, first party to protect yourself and your family members, there's something called uninsured and underinsured auto insurance. First of all, can you tell us what that is? And is that also a first party or a third party type coverage?
That's a third party type coverage. And the best way to explain that is, first of all, it comes as mandatory as part of your New Jersey policy. the policy limits for what we call or uninsured motorist, or underinsured motorist, are pretty much the same as the liability limits. So if you have an insurance policy where you pay for higher limits of $100,000/$300,000, the and the coverage will be the same for those coverages. And what uninsured motorist coverage is that if you're in an accident and someone is at fault for causing that accident and they don't have insurance coverage, you can go against your own insurance company. It's called uninsured motorist coverage because that car did not have coverage, and then you would have a first-party claim.
So that's something that you can do to protect yourself. So that would be, I guess, a first-party coverage, but I think you said it has to match the liability coverage as well. Is that correct?
Yeah, that's the way it's written. It usually
Okay.
matches the liability coverage. Now, to explain UIM coverage, that's underinsured motorist coverage. If you have insurance policy limits of $100,000 and someone strikes your car and causes you injury, physical damage or personal injury, and the amount of the claim is, let's say, $100,000, but the car only has $15,000 of coverage, and that's all you can collect for the car that was at fault. In that case, you can resort to your own insurance policy for the difference between $15,000 and your coverage of $100,000. So for a claim of $100,000, you get $15,000 from the car that struck you, and you get $85,000 from your own insurance company.
Okay, now you talked about the ability to sue for pain and suffering. How about your own medical bills? Or is there anything in the policy that would cover, say, if I'm driving my car and someone hits me and I'm hurt, who pays for my medical bills?
The medical bills in New Jersey, under all policies written, have a mandatory personal injury protection coverage. And what that means is your medical bills are paid for on a primary basis by your own automobile insurance carrier, unless you opt out and want health insurance to be the primary. But you can do that too. But most people, majority of people, accept the personal injury protection medical benefits, which pay for your medical bills that are reasonable and necessary and that are related to the accident.
So that would be a first party benefit as well?
That's correct. It's called PIP. It's called
Okay.
PIP.
Now, a couple questions. You talked about your own personal policy. What happens if I am driving, I lease a vehicle and I get in a car accident? Am I covered?
If you do what, Barn?
If I lease a auto?
A lease an auto.
Yes.
Yes, in some policies, it depends on the language. If you lease an automobile, your own coverage typically will apply to you because the insurance coverage follows you and follows your car. So if you're in somebody else's car and you're driving, your insurance policy will insure you.
How about if someone's driving my car? Say my next door neighbor wants their cars in the shop and they want to drive my car, and they say, sure, you can borrow the car. What happens then? Am I covered? Are they covered?
They're covered as well, as long as you gave permission to them to use the car. But short of that, if somebody took your car without your permission, your insurance coverage would not apply to them.
Understood. One question about that, me driving a car as well. Say I'm a taxi driver or a limo driver, and I get in an accident. Does my own auto policy cover me for that?
It does not. There's an exclusion under personal automobile coverage that excludes the use of your vehicle for business purposes. So if you have in other words, if you have a car and it's insured by Allstate, but you want to use it as a Uber driver, that's business. That would be excluded from your personal auto policy.
Understood. One last question, Lou, about liability insurance. So this would be third-party coverage. Under what circumstances should someone consider buying an umbrella or an excess policy? And what is an umbrella or excess policy?
An umbrella or excess policy, and I'll use excess policy, is additional coverage that you can purchase over and above the insurance coverage that you have with your automobile. And it happens to be very inexpensive. For example, if you have an insurance policy of $100,000 on your car, and you want additional protection in the event that a claim exceeds that coverage, and then they can go after your personal assets, your home, and so forth, you can buy what's called excess coverage, and it usually comes in $1 million increments. So for $1 million coverage, you may pay $50 a year over and above your auto coverage, and that umbrella can also apply to your homeowner. So your home, when your homeowner's policy would also, your home will be protected by that additional $1 million.
So I guess that's an individual purchaser's decision based on how old they are, what kind of assets they have, and how much they want to protect themselves.
That's correct. And I think the best advice we can give, Brian, to the audience is to check with your agent and broker, and they will advise you what your options are and what the cost is and what would be best protective of your interest and the interest of your family.
Okay, Lou, thank you very much. I hope any questions that people have had about their personal auto or their use of vehicles have been covered by your topic. Thank you very much.
Okay, thank you, Brian, and thank everybody for tuning in.